Welcome to Success Series. In today's video, we are going to look at IFRS 15 Revenue from Contract with Customers. IFRS 15 Revenue from Contract with Customers. And in this video, we are going to look at a question on the steps to recognize revenue. If today is your first time here, kindly hit on the subscribe button in order to be notified with our new videos. Moving on. Today we are going to look at a question on the steps to recognize revenue. In order to dive into the question, you must first understand or must first have a recap of the 5 steps. Now the 5 steps can be simplified with a mnemonic CIDA, where the C stands for Contract with Customer Identification. I stands for identify the performance obligation in the question. D stands for determine the transaction price. A stands for allocate the transaction price to the performance obligation in the contract. And then finally R stands for recognize revenue when on asked the entity satisfies a performance obligation. Now let's move to the question. Now the question reads, Success Limited is a company business that primarily sells computer hardware. As well as selling computers, it also supplies and installs the software to its customers and provides a technical support package over 2 years. A business commonly sells the supply and installation and the technical support in a combined goods and services contract. The combined goods and services contract sells for 1,600 Ghana cedis, but if sold separately, the supply and installation is sold for 1,500 and the technical support for 500. Success Limited has a 31st December year end required. If Success Limited sold the contract on 1st July, explain the above using the 5-step model to account for the above transaction. So here in this question, we are required to use the 5-step model. Now let's use the 5-step model to answer the question. Now we know that step 1 is contract with customer identification, and here one of the criteria we can see in the question is that this contract has a commercial substance because there is the essence of money in the contract. So the contract has a commercial substance. Now step 2, identify the performance obligation in the contract. So here the performance obligation is the computer hardware in addition with the technical support they provide. Now step 3 is to determine the transaction price in the contract. Now the transaction price in the contract was stated at 1,600 Ghana cedi. Step 4, we are supposed to allocate the transaction price to the performance obligation. Now in the allocation, we use a table to help us in our computation. Now this is the table we are going to use for the allocation. Now we have columns for performance obligation, standalone selling price, and then transaction price. We have columns for performance obligation, standalone selling price, and finally transaction price. So under the performance obligation, we know we have 2 performance obligations. That's the computer hardware and then the technical support. Now standalone selling price here is the price for each of the performance obligation, the amount of price for each that the performance obligation will be sold for in an ordinary course of business. So here the computer hardware in the question, we were given that its standalone selling price was 1,500. Now 1,500 is going to help us to allocate for its transaction price for that of computer hardware. How is it going to be done? Now we'll pick the 1,500 and then we'll divide by the total standalone selling price. Now the total standalone selling price here is the computer's hardware standalone selling price, which is 1,500, plus that of the technical support standalone selling price, which is 500. Adding the two will give us 2,000. So therefore the transaction price allocation will be 1,500 divided by 2,000 multiplied by the transaction price stated in the contract, which was 1,600, and we are going to get 1,200. So 1,200 will now be the value for the transaction price. Now let's look for that for a technical support. Now technical support standalone selling price was 500. Now we'll pick this 500 divided by the total standalone selling price, which is the 2,000, multiplied by the transaction price stated in the contract, which was 1,600, and now we are going to get 400 as our transaction price. We'll then sum the transaction price up, and this must be equivalent to what was stated in the contract. So 1,200 plus 400 will give us 1,600. And this helps us to know whether we are on the right path or not. Now let's move to step 5. Now in step 5, we are expected to recognize revenue when or as the entity satisfies a performance obligation. Now, we know the performance obligation are two, which is the computer hardware and then the technical support. Now the revenue we are going to get from the computer hardware is going to be the transaction price. And here we know that it is satisfied at point in time, so we are going to get the whole amount as soon as we sell the computer hardware. So the computer hardware is at point in time, so we are going to accrue the 1,400 that we calculated in step 4. So 1,400. Now with the technical support, our question made us to understand that technical support was for only 6 months. So technical support was for only 6 months, because the contract was sold on 1st July and the company has a 31st December year end. So the technical support covered only for a period of 6 months. And here in step 4, we calculated for the technical support transaction price for a whole year, which was 400. Now going to allocate this 400 for only 6 months. So it's going to be 400 multiplied by 6/12, and this is going to give us 200 Ghana cedi. Now we then have to sum the values up. So we sum the revenue from the computer hardware and then we'll sum that of technical support. So doing that, we'll have 1,400 plus 200, which will finally give us 1,600 Ghana cedi. Thank you.